All right, roundtable. Let's run through some of what we have going on at the moment. The Aussie yen trade, of course, is working. We were looking to buy that around 81.40. With price above this high and in between, or rather in between this high here and this low, let me go ahead and kind of connect the two with a rectangle. I'm not too excited, actually, about putting on additional positions here. We have to look back and say we've got this trend going on until we can get price really accelerating to the upside and breaking over some of these highs here, and certainly this old high above 88. This is more in tune with taking profits right in here. So if you're long from 81.40 or anywhere down there, you can join me in exiting this trade at a bit of a profit. Here's the Canadian dollar. We built this trading plan, if you remember, a couple days ago. We were looking for a break below 101.57 and then a retest. We got that this morning early in the New York session. With the holiday weekend, I wish we would have gotten more out of this trade, but only because of the holiday. If you're concerned about a gap, this is the time to take the profit off. Not that I'm expecting the Canadian to gap up 100 pips or something, but it could. And so if that's a concern, or if your risk management won't let you take a 100 pip loss or a catastrophic loss like that, then you absolutely need to either lighten up the position or take some money off of the table. With the British pound, we're looking at a daily bar here. Until price is above this high, I'm not willing to get too excited about the prospects of the currency moving up. In other words, I'm expecting it to break this low before it breaks this high until it breaks the high. So were this not a holiday weekend, I would actually be looking to take a short position here. But I do want to, coming out of Wednesday, so today's Tuesday, so tomorrow the U.S. markets are closed for the holiday. So for Thursday, I'm looking for some opportunity to take some shorts in here. Let me go to a 240-minute chart and show you what I mean. 640, no, 240. So you can see, look, the price has really just been banging its head up against this level. So I'm willing to take a low-risk short in here. If it's 20 pips or under as an aggressive trade, I'm willing to do that. With the first target near these lows here at 56.49, and then of course much lower target of 55.03. In other words, right around the low here where the market started turning around. Jumping way over to the euro here on the screen. Let me go ahead and back out a little bit. We have this resistance level. Let me zoom way out because it was former support. So you can see on the long term, euro is definitely in a downtrend. Has all the makings of a reversal here in terms of the look. However, just like with the pound, until price has broken above this prior high, I am simply anticipating that the trend which is in force, which is down, is going to continue to push price, which means I'm expecting price to break down below this low. Again, we're at a holiday week. So let me go to a 240-minute chart. Come on, Bessie. So until we get a break above the prior highs, I am looking for low-risk shorts. What that means is 20 pips or less, and after the holiday, of course. First target is going to be, depending on where the market is, of course, 25.62. If this low holds, then certainly these prior lows here at 24.27. Pause here. All right, so I want to jump from currencies over to the stock market and take a look here at the S&P 500. We haven't talked about the S&P for a little while. You can see I've got a rectangular box on here for resistance as my zone. Price in recent months, you can see, moved above that resistance level on 2 occasions and was unable to continue. However, we have price shooting back up here. Well, shooting. We have price moving back up again until it breaks above the prior highs. I am anticipating it to move down below the low here. Let me go ahead and zoom out so we get a better look. And you can see again, multi-year downtrend is in play. And until price can break above this 2008 high, still going down. All right. So what that means for any stocks that I'm looking at, I'm looking for a short setup. So let me jump right over to some of those stocks. Two that I love to trade because they're very popular and they have a big following are Apple and Amazon. Apple, we had an aborted trade, meaning I got stopped out. I was looking to sell against the high over here at whatever that was, $588.50. They just eked me out by a few pennies and then moved price down. You can see price is broken above these prior highs. However, again, until price can break above our prior high here, I am still looking for this short-term downtrend to kick in. However, let me back up. With Apple, unlike the rest of the stuff we've been looking at, the overall trend, multi-year trend, is up. So I am looking for a price to break above this high before I'm looking for it to break below that low. But because of the S&P 500 index, I am willing to take sell trades. The key high here is going to be this gap, which comes in just below 620 for Apple. Amazon, I think, pattern-wise, is very similar to Apple. You can see multi-year uptrend, not quite as rocket ship-like as Apple. Let me make this a little bit bigger for you. Whoops. So not quite as rocket ship as Apple, but certainly an uptrend nonetheless. So because the S&P 500 is hitting up against resistance, I am looking for these prior highs to hold, which means I'm looking for low risk shorts because of that. I like selling against this prior high here with a very small stop, 55, maybe 75 cents. And then certainly selling against the high over here if and when Amazon gets up there. I'm also looking to put on some spread trades in the options market. I'm not going to get into those just because there's a lot of detail that needs to go in there. Jumping over to the TLT, still stuck in this kind of sideways no man's land, but I do want to point out we have multiple highs where this market has simply failed to go up. So what that's telling me is, of course, the Treasury market is not moving up either. So if you're looking to trade the Treasury market, we do have a resistance level which is building. But again, as the longer this sideways action goes along, well, actually, let me say that in a little bit different way. Let me back up, race. Here's the prior high. Until price breaks above that prior high, I'm expecting price to go down. The longer this, however, continues, the more I am expecting the trend to kick in. And the same, by the way, goes for anything. So I have to back up and look at the trend and see, well, you know what? Multi-year trend is up on the TLT. So I would anticipate the high to be broken before the low.